In the book, Street Smarts, Adventures on the Road and in the Markets, author Jim Rogers provides economic and political analyses based on his own observations from travels and financial markets. Rogers warns about the economic dangers threatening the world today. He explains why Asia will be the dominant economic force in the 21st century, and why America and the European Union are in profound decline. Here are some interesting financial ideas from the book. I moved to Asia in 2007, and even more importantly, I moved my children here. Throughout their lives, understanding Asia will be indispensable for success, and mastering the Mandarin dialect will prove worldwide as important as mastering English today. Work experience in youth provides quantifiable benefits. Learning the value of money helps you build an identity and manage finances, gaining a tangible level of autonomy. The most important predictive factor for a happy adult life was having a paid job in adolescence. The smart move for all MBA program graduates would have been to obtain degrees in agriculture and mining. More people today study public relations than study agriculture. More study physical education or sports management than study mining engineering. But agriculture in the future will be a more profitable sector of the economy than finance. On Wall Street, it is obligatory to work hard, but few succeed. Many people make a lot of money during bull markets, but doing so under normal conditions is more difficult, and in a bear market even more so. Most people are expelled from this industry. Persistence and perseverance are absolutely essential for survival, but equally important is judgment. To succeed on Wall Street, one must be extremely curious. Who knows what might come out from under a rock when you lift it? Moreover, you must be skeptical. Most things people tell you after you turn over that rock will be inaccurate, reflecting a lack of knowledge or the distortion of information, whether from the government, a company, or an individual. The advice I give to everyone, the advice I will give to my children is this: before asking how much you will be paid for the job, first decide if it's the right job, if it's the right place for you. Because if it's the right place and you have the right job, the money will come. Money will find you, I assure you. Money should be the last of your questions. Short selling is, in fact, indispensable to the market. It provides both liquidity and stability. The market needs both buyers and sellers. Without sellers, prices would skyrocket. Without buyers, prices would collapse. Let's assume that everyone caught in the dot-com craze wants to buy a company like Cisco. The price of the security rises from 20 to 80. Short sellers start to appear. The price might then go up to 90. Without short sellers, it could reach 110. Without short sellers, there would be no sellers at all. No liquidity. Things would spiral out of control. Short sellers temper the mania. So, short sellers are beneficial for the market. They saved you from buying the overvalued security at 110. Instead, if you bought it at the highest price, you bought it at 90. And when you sell everything, thanks to the short seller, you can get out at the price of 8 instead of 3. Short selling has persisted for about 400 years because, after being repeatedly tested in the market, it proved to be valuable. If you're so smart, why aren't you rich? Don't be afraid to make mistakes in life. It's okay to lose money, to go bankrupt at least once and preferably twice. But if you're going to do it early in your career. It's better to go bankrupt starting with $20,000 than with $20 million. Do it early, and it won't be the end of the world. Losing everything can be a beneficial experience because it teaches you how much you don't know. And if you can recover from 1 or 2 failures, there's a chance you'll have more success in the long run. In 2007, before the financial crisis, 65% of Americans claimed to have money invested in the stock market, according to a Gallup poll. In 2011, this percentage dropped to 54%. Focus on what you know and expand your knowledge. Learn to think in appropriate terms. This is something new. This is something different. This is a change of direction. Any new or different thing leads to consequences over time. You need to learn to think freely. From time to time, the wisest course of action is to do nothing. In fact, most successful investors do nothing most of the time. Don't confuse movement with action. You need to know when to stay and wait. If I told you that you could make only 25 investments in your life, you would probably be extremely cautious about investments. Most people jump from one side to the other. They have to do this, they have to do that. On one hand, they heard a strong tip. On the other hand, their brother-in-law told them something. If you're a short-term day trader, then sure, go ahead. But such traders are few and far between. If, on the other hand, you're an investor, you need to be just as cautious as if you had only 25 investments to make in your entire life. That's how investors make money. Nothing makes people feel smart like a growing market. It's remarkable how many people confuse a growing market with intelligence. The main dream people have is to give up everything, get in the car, and travel around the world. There is a palpable joy when you are in Asia. You step out of the house and feel like you are part of a place that is progressing. There is a pulse in Asia, a dynamism that no longer exists in America, the same feeling I once had in New York, but which New York no longer creates. New York is the economic and cultural capital of what is now the world's largest debtor nation, the largest debtor nation in the history of the world. The world's largest creditor nations are in Asia. That's where the wealth is, that's where the dynamism and energy are. China, Japan, Taiwan, Korea, Singapore, Hong Kong. Their savings and investment rate is high. In China, it's 30%, in Singapore it's over 40%, contributing to Singapore's success story today. America's savings rate, currently at 4%, has oscillated around 2% in the last decade, and has even gone negative several times. We are consuming our capital at a rapid pace, following the path of Britain after World War I. If you, as a nation, only consume instead of investing and saving, borrowed money helps you very little. And worse is that the people to whom we entrusted the responsibility of addressing this problem, excessive consumption, excessive debt, decided that the solution lies in even greater consumption and even larger debts. Capitalism without bankruptcy is like Christianity without hell. One of the secrets to Singapore's success lies in its high savings and investment rate. It has the highest savings rate per capita in the world. Everyone saves and invests for the future, as is the case in many Asian countries. In Singapore, saving is mandatory anyway. You are required to contribute 20% of your income to the Central Provident Fund, a national pension fund, plus a 16% contribution from your employer. When governments run out of money, they don't stop spending. It was the same 2,000 years ago. Politicians know no limits. If Rome ran out of silver, if its economy was mismanaged, and the empire had trade deficits, the only way to hold good times in place was to create more money. The Maastricht Treaty stipulated that no member government could run a deficit greater than 3% in a year regardless. The French, to comply with the contract, were the first to implement false accounting. We won't pay our pension obligations this year, we'll pay them next year. This year things will look good. Next year they'll look bad. But next year is next year, and we won't worry about that. Then the Italians began to imitate the French, advancing with their own well-established recipe for falsifying records. Everyone is throwing stones at the Greeks now, but in the late 1990s, everyone was falsifying accounts to meet traditional terms. The world will see higher food prices in the near future because global stocks are declining. Politicians will blame this price increase on those evil speculators. But in fact, if prices don't rise, farmers won't come up with new production. If the price of copper rises, not too many people will know at the moment. But if wheat and sugar prices rise, everyone will know on that day. And everyone will be unhappy. And this often leads to social unrest. Tunisia, Egypt, Libya, Yemen, Syria are just the beginning. With rising food prices worldwide, we will see more discontent, more government falls, more countries disintegrating. The protests in Beijing's Tiananmen Square began in the spring of 1989 as protests against inflation and rising prices. Only when the Western press appeared did the students start shouting words like democracy. All empires have ended badly because they simply spent too much money. They incurred debt, declined, and collapsed. Successful countries do not tax savings and investment. They encourage their citizens to save and invest. They tax consumption. In America, we do the opposite. We encourage consumption. Any interest we pay is tax deductible. We are encouraged to consume rather than save and invest. One of the basic economic principles is that savings equal investment. It is probably found in the first chapter of any economics textbook. To prosper, we need to reverse our priorities. If you were smart in the early 19th century, you headed to London. If you were smart in the early 20th century, you packed your bags and moved to New York. If you are smart in the early 21st century, you will move to Asia.